Welcome to the Daily Update. This is being prepared Tuesday, May 10th, where we'll look at the action in the market today and then see how things look for Wednesday, May 11th. And it was a kind of okay day. We were up pretty strong, then we ended up going down and being negative, and by the time everything was said and done, we were up just a little bit with the S&P. So not really a convicting bounce that we saw, but still, it at least slowed down the decline for right now. The big question that we have to ask is, can it continue? There's still some technical damage that's being done, even with the up day. So there's not a lot of real happiness happening right now. In fact, we're still showing a lot of negativity. Now we have a big release of the CPI coming out on Wednesday, and that could really have an influence. So we'll have to see. Is the market going to bounce up off of that if it finds something positive, or are we going to continue to go lower? The technical picture is still pretty negative, but we are oversold. So we may get some kind of a bounce from that. As I get started here, I just want to say again that you can find a lot of the slides that I use at spxinvestingblog.com. I upload those as soon as I can to that blog after I finish recording the video, and I upload them just as a gallery that you can look at. I also upload them as a PDF that you can download and look at, or you can just right-click and do a save as. I'm also playing with some different ways of how I'm displaying the charts that I look at, but I don't use in the video. And I'm trying to really pare down some of the charts again. I want to try to keep the videos as short as possible. My goal each day is 20 to 30 minutes. Well, you can just look at the timestamps on this, and I'm not hitting that goal. I'm closer to the 30, if anything. I know that you're busy. I know that there's lots of things going on, and I want to share useful information with you. I don't want to just reiterate information that you can get elsewhere. I want to give you something that is actionable, something that can really help you make decisions. So I'm playing around with some different ways of doing things, something like maybe a daily newsletter type of thing that I upload to the blog that talks about some of the things that are important to know, but not necessarily part of the analysis that we do. Also, please be aware, as far as the YouTube comments, as of Friday, May 13th, I do plan on disabling those. People are just not using the comments section, and I'm getting a lot of spam and getting a lot of useless comments that don't ever get posted anyway. So why not just block that out? I would prefer to talk to people more one-on-one or have more of a direct conversation. The best way is to email me at john@spxinvesting.com. I know that's kind of old school, but given the situation right now, that's probably the best way to contact me. If this is not desirable to you, if leaving the comments up on YouTube would be better for you, let me know. But I haven't really heard anybody yay or nay on that right now. Another thing I want to mention is I'm sorry for the late postings. On Tuesday, the video ended up being posted much later than usual. I apologize for that. I get working on things and I fall behind, and before you know it, I'm just racing just to post things because I'm trying out a lot of different things that can take some time. So I apologize. I'm also trying to use a mouse today too, where I usually use a pad. And so things will be a little bit different that way. I'm also trying some different things with the sound. But let's go back. At the open, we did have a gap higher open, and we went up to R1, which was at about 40.57. As the day went on, we saw some selling come in, and that took prices negative. So we didn't get that real strong bounce that we were hoping for. At least it didn't last very long. Buying then took prices back positive and close to the earlier high. So we kind of bounced around a bit on Tuesday. Going into the close, we saw some late day selling that took prices back to the unchanged level. Imagine that. And then there was a little bit of buying going into the close that allowed for a small gain. On the day, we ended up being up 0.25%. Volume was above average, and what we're looking at right now include the same list, the technicals, which are negative but showing a lot of oversold indications, inflation and interest rates. And that'll probably be the story for Wednesday as well, with the CPI coming out. That's a biggie. The geopolitical concerns that we rattle off every day, I'll hit those more at the end. And then the earnings as they come out. Some might be positive, some might be negative, but that can sometimes influence the entire market. What are some comments that we can make about Tuesday? The S&P was up as much as 1.9% and down as much as 0.8% during the session. That's a pretty wide swing to only finish slightly higher. We did regain the 4,000 level, so more of a psychological thing from that point of view. Oil did drop under 100. That's according to the chart I'm looking at. I read something else where it was slightly above 100, so there's a little discrepancy there. There is technical damage that continues to be done, even though we had a slight bounce on Tuesday. And I'll go through some of the charts and show you that. Growth did do pretty good on Tuesday, but it has a long ways to go. It's still in an overall downtrend. There's a lot of damage that needs to be made up for if growth is going to come back, take charge of the market, and send the indexes higher. And then we are coming off of that short-term oversold bounce, but can it continue? The S&P continues and will be, for quite a while, to be in correction territory. The economic report that came out on Monday was the NFIB Small Business Optimism. It was unchanged at 93.2, but not a real influential report. Our trend is negative and strengthening. The little bit of a bounce we saw didn't really change the ADX. The bias continues to be negative, even though we had a slight bounce on Tuesday. Our momentum over the last 2, 3, 4, 5 days continues to be negative as well. Let's go back and look at the day's session. As far as sentiment, we're still at extreme fear. It ticked up one notch from Monday, but is still pretty extreme. And we use that as a contrary indicator. But it can still go lower than this. Here's a longer-term chart. And again, I'm trying to use the mouse to point some things out here. We can go lower than this, but we are at a pretty extreme negative reading. The VIX, it actually declined a little bit on a closing basis when we look at the line chart, and we closed kind of near the lower end of the bar on the bar chart. The VIX of the VIX, which measures the volatility of the VIX, it declined. We can see the line chart down below, just showing how it declined on the closing basis, and we're kind of chopping a little bit sideways to slightly lower on the bar chart. The Ulcer Index turned down slightly on the short-term chart. Here's a longer-term view of that chart, and we have spiked out at this level before. Are we getting ready for prices to go higher? We don't have a lot of confirmation of that yet, but it's one of the scenarios we need to be prepared for. The equity put call ratio did decline on a one-day basis, but it's still pretty high overall. People are quite hedged in their positions. They're buying a lot more puts these days than they are calls. And here's the 5-day moving average of the equity put call ratio showing that we continue to advance. Different sectors. The sector that actually did okay was tech, and it was up a little over 2%. All the other ones that had gains were minuscule in comparison. We also had a lot of sectors that were down. Real estate, which has been having some trouble. Utilities, which have been doing well. They've been seeing some more weakness as of late. Staples were down about 0.5%. So it wasn't a real day of conviction overall. And here's just going back to the all-time high, showing that energy has been doing the best. Utilities have been doing, at least they're positive on the year. Way over on the right, discretionary, communication, tech. And we're seeing some more weakness in real estate as well as the financials. Technical alerts had a lot of positive ones as the day opened. So that's the green area down at the bottom. This starts at the bottom and tries to draw its way to the top, so you get the more recent readings at the top. But we still saw a lot of negative things happening. The S&P did get back above 4,000, and then when we declined, it set a 52-week low in the S&P. We had the BPI, and I have a chart of this to show you. The BPI crossed below 30. So that's starting to show extreme negative. Intraday, we gapped higher. We gapped up to R1, chopped a little bit sideways, There was really no major buying that came in, so then we ended up dropping. We actually went down negative and then chopped in negative territory for most of the day. As we were getting closer to the close, we did see some buying come in. We didn't get right back to the high that we set right at the open, and we chopped a little bit. Then there was a little bit of late day selling, and then we ended up just bouncing up slightly. So not a real day of conviction overall. We're still below the long-term support that we broke on Monday, but we're still above the S1 level. Down here at the bottom, you can see where volume was above average. And then here's a longer-term chart. I know it's a mess with all these dashed lines on here. I just want to show areas of possible support if we continue to fall. And there's nothing magical about these. These are just levels that sometimes the market hits and then says, okay, we're going to stop going down right now and turn around and go in the other direction. We're down 16.59% from the all-time high. As far as the technical overview, those things that are positive right now, energy, even though it declined, it's still positive. Commodities by the CRB index are still positive. Gold, and I have a chart of that later that I'm going to show. We're kind of at an interesting point with gold right now. Interest rates continue to advance, and staples. Those things that are negative, and the list is long, and it really hasn't changed over the last few days. You can just kind of read through these different indexes in areas that are decidedly negative right now. And bond prices. They bounced a little bit on Tuesday, but they're very oversold as well. Our trend, it is still continuing to strengthen. The red line is on top even though it declined, but buying also declined. So the dark line of the ADX continues to go up and we're above the moving average. The Arun is also showing the red line is pegged all the way at the top. That means that sellers are in control. After bouncing a little bit with the buyers, it declined a bit on Tuesday. When you compare the two, that creates this oscillator that is below zero, so it's negative and declining. But we're getting rather extreme right now. We don't usually use this as an overbought and oversold indicator. We can just compare with, okay, this is how low it went in the past, and then it turned around and went the other way. So that might give us some kind of insight. As far as breadth, we were pretty negative, even with the up day. We continue to decline based on price, and we're below the moving average, and we are pretty much flat based on volume, but we're below the moving average as well. So that's negative. And we're seeing this real negative divergence where price had been going higher, where we saw a real trailing off of volume. We also measure the 10-day average of the S&P highs and lows, and we're getting pretty extreme. Now, we could go lower than this, but other times this has marked some kind of an extreme bottom. And then also just looking at the new highs and new lows on a daily basis, we're getting pretty extreme. There wasn't a breakout of new highs even with the up day. Now, we, again, could go lower with this chart, but it is starting to get pretty extreme. The advanced decline ratio is below zero and declining, with both the 19 and 39 EMAs declining, and not necessarily extreme at this point. This is kind of interesting. The new highs and new lows. We saw a lot of new lows come in on Tuesday. But if you look at the 5-period moving average, it's starting to turn up because not so long ago, we didn't have a real increase in new lows. Is that telling us something? We'll keep an eye on this, and we'll see, can this red line cross above the moving average? 10 days looking out, we still continue to be in a decline. Accumulation distribution is below the moving average and declining. Short-term look, the rate of change, the only reason I brought this up is we settled down a little bit. We had been extreme negative, and with the slight update, we bounced back more into neutral territory. The McClellan oscillator is trying to turn up after giving an extreme negative reading. The force index also advanced slightly on Tuesday, but is still pretty extreme and is negative. This is also what I wanted to point out here with the Stochc RSI. Yeah, we were up a little bit, but see how it just blipped up? It's still extreme negative, as is the Williams %R. The rate of change is still extreme negative when going back 5 periods. The 20-period EMA study, extreme negative. 50, extreme negative, so that's more intermediate term. We're still declining with the 200 EMA study. Stochastics are extreme negative and having a really difficult time bouncing back up. Intermediate term, we are still extreme negative. Longer term, we're also extreme negative and kind of bouncing around down here. This is another chart that I haven't shown before. This is U.S. stocks, and looking back over 5 periods for the average of their highs and lows. And then we can plot this out to see when we have an extreme positive or extreme negative reading. This is the S&P 500 on the top, and then you can see other times when we really spiked. A lot of times this would come in not too long before we would see some kind of a bottom. We're starting to get extreme negative with this indicator, so we want to keep an eye on this. Intermediate term, rate of change, still extreme negative, but trying to bounce down here. And the Sean trend meter continues to decline and is extreme negative. The Connors RSI did bounce a little bit after giving us an extreme negative reading. The STO continues to decline based on price and volume. Here's the BPI. We've dropped below 30, so this is extreme negative territory. The PMO continues to decline overall and is kind of getting extreme right here. And based on price and volume is also declining. The other PMO study shows that those that have a PMO that's rising, those stocks in the S&P 500, that is now extreme negative. Those that are giving us buy signals is also extreme negative. Those that are above 0 continues to decline. The CCI based on 14 periods, extreme negative. 20 periods, extreme negative. The boom indicator, the one that I'm looking at, is really more in the top area. This goes back 50 periods, so it's more of an intermediate term indicator. We're still showing an extreme negative reading. And what this measures is how far away are we getting from the moving averages. The moving averages act like magnets or rubber bands. When price gets too far away, price will have a tendency to bounce back towards the moving average. The top measure goes back 50 periods, the bottom goes back 200 periods. So we're extreme negative in the 50. Longer term, we continue to decline. Here's the TTM squeeze. This is one of the newer indicators that I just introduced, where it is negative and showing that the strength is pretty negative right now. Could we bounce from this? Also, another thing that I have plotted on here, this is called the VWAP. It's a type of anchored moving average where you can go back to a specific price and then measure that as a moving average going forward. And I just kind of noticed that when I was looking, because I put one of these on the chart. We are at some kind of a support level right around 4,000 with the S&P. Can we bounce up off of that? Here's a longer term look at the TTM squeeze. This is newer to us. We use this more as an oscillator. Are we extreme? Are we at the point where we might be able to see some kind of a bounce from this reading? The balance of power continues to be negative and was pretty much flat. Different trading systems. The Elder system for the S&P, negative with a red bar. The SPY, negative. And the parabolic SAR continues to be negative because the dots are on the top. Here's the go, no-go system, another new trading system that we'll just kind of follow. When we're purple, we're negative, and we're solid purple. So we continue to decline even though we advanced slightly on Tuesday. Long term, we're below the 200-day simple moving average, so that's not doing well for the long-term trend of the S&P. Looking back 250 periods, we are below 0. That's negative, and here's a longer-term view of this chart. There are times when we can use this as a sort of an oscillator, but we're just dropping below the midpoint right now. Looking at our longer-term moving average study, we are really extreme looking at the 50 period. At the 150 SMA, we're extreme negative, and we're declining on the 200. Then our special K continues to decline. That's more of our intermediate to long-term trend measurement. Looking at some other markets, the diamonds continue to be negative. The Dow's been holding up okay, not doing as bad these days. The Qs, they were up on Tuesday, but they still have a lot of work to do, and we continue to be negative overall. Then the dollar, it was up about 0.25% on Tuesday to 103.94. Oil, this is where I show that we were slightly below 100. And then gold, we are positive overall with the blue line advancing. That's the 50-period moving average. Well, we've come down to the 200-day moving average. Are we going to be able to bounce up off of that, or are we going to break down below that? And here's a longer-term look of gold with the ETF. And silver has just been getting hammered. I know, the joke's in there. It's still in a positive trend with the blue line on top, but it's just been getting decimated a lot lately. It's really surprising to a lot of folks that feel that in the kind of environment that we're in, precious metals should be doing better than they are. But they're kind of confusing a lot of folks right now. And here's the longer term look at the ETF, where we have broken through this downward support level. And diesel, we're watching that. It continues to advance. Over here on the right-hand side, diesel is just going up, which can have a real impact on the U.S. economy. As far as bonds, we bounced a little bit, not much, but we continue to fall overall based on price. And then the yields, the longer-term yields, they did come down on Tuesday. We were a little bit flat with the 2-year, and we declined with the 3-month as well. But interest rates still overall continue to really go up. Here's the Japanese yen. It's showing some more follow-through weakness. The euro, that's kind of interesting. We're getting to the point where the euro and the dollar might pair out with each other here. It's going to be interesting to see if that happens, number one, and then what happens if that happens. So what's our outlook for Wednesday? The technicals are negative. We're trying to bounce from being oversold, but can it continue? The markets have broken below that intermediate term range that we've been in. We're at the very low end of that. We're, in fact, breaking below it right now. Growth and value, the battle still continues. The economic report. The big one is the CPI coming out on Wednesday. Also the Treasury budget, and the weekly mortgage applications index. Not a real biggie. CPI is what everybody's going to be talking about. Geopolitical events, Russia, Ukraine. Again, anything can happen at any time, either positive or negative, that could influence the markets. They're also doing a continuation of the lockdowns in China, and that really can affect things in the U.S. I was reading or listening to something about there's a shortage of baby formula in the U.S. right now because we buy a lot of that from China, and we're not able to get that now, and that's really impacting people that have babies. And then what other things may be coming out in the future? Inflation and interest rates are kind of the real story. Oil, we want to keep an eye on that. Earnings as they come out. Again, Fed speak, not really being a big influence right now, but you never know. They could make some kind of a comment that either helps or hurts the markets. And then the longer term issue that we're watching with Japan. This has been going on for decades in Japan, and it might be coming to a head where they may have to really start selling their own bonds. They own a lot of U.S. bonds that they may have to start selling, and what's that going to do to the U.S.? So what are our scenarios? We're pretty much looking only at down right now because of rising interest rates and inflation fears, and we'll get some more data about that. Earnings as they come out in Fed speak. The technicals are negative, but they're oversold. Can we get more of a bounce? Looking at the positive side, can this bounce continue? Will we get some kind of relief rally after the CPI comes out? We may not. The markets may continue to tank, or it may be one of those things where, and the market just kind of chops sideways. The possible positive scenarios that we look at, there's really none on the table. The staples did spike up a little bit, but they haven't started to come back down. So any of those are not really happening. And the technicals, we're looking at pivots and previous levels that may provide support if we're falling. They may also provide resistance if we are advancing. Sideways, we're not in a sideways market right now because the ADX is above 20 and it's getting stronger and it's giving us a negative trend. So our conclusion is the S&P is negative. Short term, negative and oversold. Intermediate term, it's also negative and oversold. The oscillators are negative. We're below all the moving averages. Long term, it's negative because we continue to be below the 200-day simple moving average. So thank you very much. Have a really good Wednesday, and I'll prepare the next video after Wednesday's session.